All right. So let's kind of review what's going on today. This is not a trade that I took. As you can see, there are no uh, arrows versus the arrows over here, right? Not a trade I took, a trade that I missed. And looking back on it, it's 100% a trade I could have taken and probably should have taken, but I didn't. So let's kind of go through it, all right? What happened here that I didn't get in a trade, right? So first off, we have 930 news, which is PPI, which is a change in price of goods. That came in at 0.9%, 0.7% higher. So that's actually something great for price, or should be good for price. But you see, boom, you have the massive drop off. Cool, okay, fine, no problem. So originally coming in, I understand that this is my news high and this is where I want to target. So for the entire morning session, I'm looking at this and I'm like, all right, cool. This is a target that I want to hit. This is the news liquidity. This is where I'm looking for price to get to. All right, cool. So let's go to 930. Let me just drop a line here. Boom. So 930, right? From 930 onwards, I'm essentially looking for longs to get to that point. So I have this, I have this. There's absolutely nothing that points to me being able to get in these longs. And what we're doing is we build sell side liquidity. I really, 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 really wanted price to come down into this area to go higher. Why? I'm just going to put a dot on it so we can see it. Oops. Ah, shoot, you don't see it. Well, anyways, it is this 15-minute FEG. I wanted price from here to come lower into this 15-minute FEG to ultimately take it on higher. All right. Oh, it didn't. It's a lot. Whatever. That's what I was looking for. So I wanted this price to come down into here, give me that entry for me to let's go long. Obviously, that didn't happen. Therefore, I do not take a trade. Right? There's no liquidity being taken. I'm not taking the trade. Continuing on, we go higher, come back, come to this FEG, we go higher again. And this entire time, I'm looking for longs and looking for something for me to get into long. Nothing presents itself. We come through, we hit the target. So my target's hit for the day. I'm already like, okay, cool. I'm done. Uh, I don't know if I want to take any more trades. Um, and oh, there is only 1 minute. You can see that there. So I'm like, all right, cool. I'm done. Whatever. I'm not gonna take any more trades. But what happens is price, keeps pushing, keeps pushing, keeps pushing on up. Um, until we get to this point. All right. This is at 10:50, the last 10 minutes of the hour, and also a macro time. In my head, I'm thinking, all right, well, we just came to the target. All this liquidity here has been hit from yesterday. I probably should be able to get in shorts, but I'm a little skeptical because, we've been bullish all morning. I haven't had any form of an entry all morning. Doesn't even make sense for me to get in this. So I didn't get in, but I watched it. And boy oh boy did I watch it. Um so first things first, let's try and validate this trade. Does this trade make sense? All right. First off, where are we in price compared to liquidity? We have all of this liquidity from yesterday at 10:30 a.m. All of this just got swept out of the market. So basically a day's worth of liquidity gone. Okay? That's the first validation. Two, time and price. For this entire 10 o'clock candle from here, all right, for this entire 10 o'clock candle, we've essentially just been going up, going up, going up, going up, going up. Now, if we look at the formation of a candle, that's how I like to do it. We have open of the candle, the low, right? Open of the candle, we have the low, open of the candle, the low, cool, right? Price then comes back, we create the high of the candle, right? High of the candle, and then ultimately the close of the candle. So if we're following that logic here, we've already put in the open, low, and this is essentially the high of this candle, right? We're essentially, whoops. At that particular point, we're essentially all the way up here. Now we need that pullback. And that's kind of essentially what happened. So understanding that and understanding liquidity, I saw this play out. I saw we had this beautiful inverse here, pretty much the only inverse all morning. We closed here below, and yeah, you can see it a lot cleaner here. We closed below. I saw it, didn't enter. Stop was actually 52. There it goes. That's how I had it. So saw it, didn't take it, and when we were here, I was like, "Ooh, this is a good opportunity to get back in, right, in this wick." Same thing here. I was like, "Nah, I'm gonna try and stay disciplined and not take it." Definitely a trade I should have taken. Um, and the more and more I build the bias for it, the more and more I'm seeing, yeah, probably should have taken it, right? All right, cool. So I'm sitting there watching this thing the entire time, and I'm putting it in the group chat like, "Yo, think I just missed this one. Wasn't too confident because of blah blah blah, because of what I was saying earlier." And that's essentially what happened. So, price came in, we broke out of the IFEG. That should have been the entry. Entry was above, sorry, stop was above the candle that breaks the IFEG, the IFEG. And this is the 50% here. Why is this the 50%? Well, this is the first area of liquidity. So if it is, the price really and truly is bullish. All right. When we come up here, we want to take some form of liquidity. This is the first area we're going to take some form of liquidity before we potentially get a bounce to go higher. Right? Um, but secondarily, this right here is really and truly the second area of liquidity, um, which is where I was obviously looking to target. Something else I could have looked at really and truly is that this is the manipulation range, right? From this low to this high. That's the push that ultimately took out all the liquidity to the left. Took out all of this. I'm not sure if it actually took out this high, which would have been. Oh, it did. Wow. Oh, okay. Okay. Um, but ultimately took out all the liquidity to the left, and would have dropped, right? It's a little clearer on the 2 minute, I think it was. Yeah, on the 2 minute, you can see it a lot better. So you got this high coming down to that low. See, it just moves down just a little bit, but it coincides essentially with these equal lows in here, which is what I wanted to get tapped first. Right, cool. So yeah, we come in 50%, and then ultimately full volume would have been at this low, and we came right to the tick, got a bounce, and continued on lower. A good trade in terms of bias, um, but very poor execution today, and I think a little bit understandably so. Right, I was kind of on this fence because we weren't able to get in any form of buys pretty much from down here all the way up, right? There was no form of liquidity taken anywhere on the way up. Um, and looking back, understanding where the liquidity was, honestly, I didn't have all this liquidity over here marked up, right? I only had the high, the 830 high marked out. Um, to my own fault, really, because Asian high is right there. Right, so let's just kind of put that on there. Asian high. Wait, hold on. Oh, no, I'm wrong. Asian high gets swept already. It's swept here. All right, pre-market. But yeah, missed trade, missed opportunity. This one would have run me some good money, if I'm being honest. Um, but it's all right. You know, I'm cool with it. I should very cool with it because it was a good trade. Um, good. I'm not say analysis because I missed a lot, but it was a good intuition that yeah, this one could probably run. But given the circumstances, it probably circumstances at the time of how I was thinking, it didn't make a lot of sense. But if I was a little bit more logical, understanding open high close of the sorry, open, low, high close of the candle, of the 10 o'clock candle. If I was more aware of where the liquidity was and what it was that we were sweeping, and if I was just a little bit more quote unquote risk averse, this could have been a not risk averse. If I wasn't less risk averse, I would have been able to, execute and hop in this trade. But all in all, this one kind of stings a little bit, but not really. This is more of like a FOMO type deal, and I wanted to make sure that I was following all of my quote unquote indicators or checklists to get in the trade, right? Which are liquidity, check. Bias, not really a check, because bias was bullish. Do we have an inverse? And is our break even point still not tapped yet? So with those, I had two of those three. No, well, sorry, two of those four, three of those four. But one and two are the most important for me, which is bias and liquidity. If I have those two, and inverse, if I have those three, I'm pretty much in the trade all day, every day. But I didn't really have that bias going for me. But yeah, that's the trade review and the trade recap of my missed trade today.